All right, let's see what else. Alon is here. All right, so we're broadcasting on YouTube. That's great. Hot in New York. Good morning, Ted. How are you guys? All right. Welcome on Discord. Welcome on YouTube. Thank you guys for joining. All right, let's start then. All right. Then let's see. Tradespoon. Yota. Okay. Then let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For the subscribers, this is my brief bio. For those of you on Discord and on YouTube or anyone else in the broadcast, the difference between our subscriptions, our services, and maybe some other similar services out there is that we have a team of financial engineers that are building models based on latest advances in AI using neural networks. And we provide signals in our Yellow Tunnel and Tradespoon services. But in addition, I use these signals, right, and I trade them in my own account in live trading room. So you have a combination of both technology and also latest advances. And today we actually have Keith. Oh, Keith, let me make you a presenter. Make panelist. Okay. We'll do same setup, same format as yesterday. So in addition, we have Keith, who's joining us from Option Hotline, and he's used to be a market maker, now full-time professional trader that also is going to join our broadcasts when he has time. Keith, do you want to just give a little talk about your experience, your bio for a little bit?
Yeah, absolutely. No, thanks again for having me on here, Vlad, and hello to all the new people here that aren't familiar with me. But yeah, so I started trading back in 2005 after graduating college. I was in math and yeah, so I was a market maker down on the CBOE floor initially, and I actually was also basically running our training program for the traders there, the new traders, teaching them how to trade. The training program that we went through as market makers actually was a year long. So, my 40, 50, 60 hours a week that I was working, on top of that, I had a couple of hours every day of training and understanding and learning how options work. And so that really helped set me up for a nice career, obviously, as a market maker. But as as the markets changed on the electronic front and the width of markets changed, market making became a little bit more focused on that high frequency stuff that was not really my preference. So I actually moved on to proprietary trading, and after getting my MBA from University of Chicago, I joined a hedge fund to learn more about technical trading so that I could leverage options with a directional bias. And then really, gosh, 7.5 years ago now, I got into the educational side of things and started working with individual traders and teaching them the stuff that I had learned over my years working at the CBOE. And I mean, I've basically traded everything at this point. I've traded equity options, fixed income options, precious metals, grains, oil, you name it. Basically, I've traded it at this point. So I've got a good history of trading experience here that I'm hoping I can help people trade smarter with what they're looking to achieve in their trading goals. So yeah, I'm excited to work with you guys here at Tradespoon and Yellow Tunnel and work with Vlad, and hopefully I can give you guys a little bit of insight on some of the ways that I look at the markets that can be different, from a little bit of a different twist on the markets. Kind of opens up the door to some brand new idea that neither of us would have thought of alone. So that's the goal here every day, right?
Yep. Thank you, Keith. Glad you can join. Thank you for your time. We really appreciate it. And we would love to get your perspective whenever you can make to these broadcasts. But thank you.
Absolutely.
So that's technology is built by market makers, by people who've been in brokerage industry like myself for many years, and team of financial engineers. They have PhD in economics and physics and math. Disclosures are very important. Trading stock and options involve risk, and not suitable for everyone. If you're new to trading stock or options, I encourage you to visit optionscreening.com so you can understand the risk associated with trading stock or options. You can always pause the screen if you need more time to read the disclosures. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm here to show you what I do in my own account for educational purposes only. It should not be assumed that the future trade picks will be profitable or equal past performance. All right, so now the disclosures are out of the way. Again, very important to have a trading plan, right? Written down rules. Process versus outcome is extremely important, the economy of control. I think as you undergo your journey as a trader, you realize that process is more important than the outcome. In the beginning of the journey, it's all about outcome at any cost, but then you realize if you don't have rules and you break your rules, that's usually when you get in trouble, when market, For me, process means you have pre-market routine, right? You read the news, you review your journal. I encourage everybody to keep a journal, write down the rules. In your trading journal, when you write down right before the trade, you have a checklist, right? You have a kind of a pre-trading routine. In hedge funds, before you place a trade, you have to these rules. What are some of the main rules that you don't want to break? One is cash. I propose 30% of your portfolio to be in cash on average. Portfolio drawdown, right? It's all about risk management. So number of positions and what is the maximum exposure per position. Look at the probability of success versus return on capital. If you're trading options or if you're trading stocks, you want to look, how much you risk to the downside, how much upside you have versus probability of success. You can structure your trade where you have high probability of success, right? Selling out of the money premium usually has high probability of success, but return on capital is small. If you want high return on capital, then you're usually going to be long volatility, right? You're buying these out of the money options or butterflies or puts and calls with the idea that the market is going to make a significant move in that direction that you're taking. Then you have low probability of success because the market has to move significantly, but then your return on capital are high. So those are the one of the major rules that I would keep in the journal and have it as a part of the checklist. Cash, number of position size, and what is the probability of success? What is return on capital, right? High, low, high probability of success, low. So that's important. Position size, 4 positions times 2.5% of account value. So usually if you do day trading, you want to risk less than 1%. So somewhere between 0.5% and 1%, depending on your experience and size of the account. and you need to have $25,000. So 1% of $25,000 is $250. If you carry a position overnight and you're not a pattern day trader, you don't buy and close, open close the same position at the same time, then 2.5% of account value. So that's the very difficult. This is the most complicated part, right, for trading. It's not the math behind this, but it's going to prospecting is different. Everybody has different relationship with the money, right? And when it comes to gains and losses, it's an asymmetrical relationship, right? When we look at $500 gain in your account versus $500 loss in your account, we all feel different about that, and that's one of the reasons we're holding on to our gains, to our losses too long, and then we cut our gains short, right? Kind of the opposite of what we should be done. So how do you calculate 2.5% so you kind of not fall into the prospect theory, right? And these biases. You decide ahead of, before you put a trade, right? You decide what your target gain and stop loss, and you follow those rules and make sure you never break the 2.5%. Right, so right now we have neural network. You can look that the spider's support is at 553, overhead resistance is at 556, trading in a narrow range, right? Still negative to neutral trend. So model basically says the market is overbought. We're heading into the earnings, right? On the upside, we could reach 560, right? We have CPI data tomorrow. We have Delta Airline announcing earnings tomorrow. We have JP Morgan announcing earnings on Friday, major banks, Citigroup, Wells Fargo. So if there's a positive surprise, if inflation is down and earnings are strong, we could be at 560 or even probably higher. We'll look at the position. On the downside, 544. So we see 544, 540. So you look at the spiders. So this is what the neural network says, right? The model, the learning part. So it basically says 545, which makes sense, right? This is the gap after the CPI data in June. 540, and the breakout is where your support is. So model basically says 545 on the upside. We do have, and on the upside, it sees 600. If you zoom out and you look at the 6 months prediction, right, this is the next 10 days. This is looking at analyzing a much bigger data set, right? We're going out for the past 20, 30 years, since spiders still. So short term, market is we're still in a strong uptrend. Higher lows almost every day. So potentially we could get to 576 in the months of July. July, from seasonality point of view, earnings season starts. So geopolitical risks aside, if the equilibrium is left, if the VIX stays at these 12, 13, right? If the VIX continues to stay low and you don't have any surprises, usually July is a strong month, right? The first 2 weeks from seasonality point of view. And then August, like last year, right? It started, August says that, potentially we could reach 576, which is, another 3% to the upside, which is obviously would be your overhead resistance. If you look at now at the positioning in terms of spider's level, if you look at 0 days till expiration, then you can see that when it comes to positioning, people are buying puts, right? This is a high demand for puts for spiders. Much more people are buying puts in much higher quantities than calls. In general, you have this volatility skew above 0.5, meaning put skew. So for the most part, it's a put skew. People are buying 545. So 545 is well positioned going into July expiration, July 19. And if you zoom out to the next expiration, August 16, you have 540, a little bit of 540 support, and then the next one is 530, right? So the 530, and then the largest is 520. So 520 is probably the worst case scenario. 530 is pretty well positioned after this July expiration. On the upside, you have 575 is the largest holding, right? If you look at July and August expiration, then 575 and for July expiration 565. So we're probably not going to break 565 by next Friday, but 565 is by next Friday, and then by August expiration potentially getting to 575 level, and that's where largest position in August expiration. Any questions? Shout out orders and pits like always most entertaining. All right, so Bob, Keith, any comments on main support and resistance levels and spikes where we're heading?
No, I mean, I think you touched on pretty clearly. Like I agree with the same thing on the support level of spiders. I mean, that range that we traded really between 540 and 550. So midpoint 545, kind of a natural target on the downside. I think if we get below 540, that's where I start to get really nervous. But down in that 545 range, I start getting that much more prepared for a potential downfall, especially like you just kind of drew up there, the 20-day moving average coming up here as time passes. Those moving averages can be a key signal to others as well. So if we start getting below that 540 level, which is kind of a hard line, and then some of the moving averages, that can really, I think, start to trigger some concern in the market. So
thank you. All right, so again, in terms of 2.5%, if you're doing day trading, we're at 556. Powell, second day of testimony. I don't think yesterday he definitely caused some rotation into the value stocks. Right? We see JP Morgan rally, Goldman Sachs rally, Symphony Financial rally, at some point General Electric rally, and then pull back, and then Microsoft pull back significantly. So we could see kind of continuation of this rotation between value and growth, right? So Microsoft could be underperforming because it's overbought, and then JP Morgan could be outperforming because it's or Bank of America, right? Bob said Bank of America, or Bank of America continued to rally into the earnings, and then Thursday the Delta Airline, Friday banks gonna announce earnings, and then that's where the high expectation is. So in terms of 2.5%, again, if you're doing day trading, 50 model has 545. I would use, for day trading, I would use 1% because VIX is still low. So maybe 550. If you're more conservative, I would 2% pullback unless something happens in the market. So I would use 550 if you're doing day trading. If you're holding position overnight, especially going into CPI print tomorrow we could move, 1 to 2%, right? If CPI is very hot, we could be down. VIX is going to stay low, and you're not going to move within 1%. So you can use 545 if you're more conservative. 540, right? 540 would be 15 points, right? So if you're planning to hold position, I would say till the next week, then I would use 545, 15 points as a stop loss. Again, I'm telling you. So $250 divided by 15 points as your stop loss. So you can buy 15 shares, right? If you're doing day trading and using 5 points stop loss for day trading, right? Same thing. You need to have $25,000. 1% is $250. 250 divided by 5 is 50 shares, right? So you can maybe, if you're doing day trading, then you're doing 50 shares for day trading. And you go through this process on all of your position, and you're always aware of what is your drawdown. If I have 4 positions where I risk 2.5%, all it takes is for CPI to be much hotter than expected, and the market is overbought, and you could have 2 to 5% pullback, right? Especially going into August, September, liquidity is smaller, and any negative news, and you can have moves to the downside. So, and I would keep a journal, then grade yourself. If you did not break your rules in terms of number of position size, maybe you're looking at liquidity, right? You want options that have weekly options and trade in tight bid and ask spread, or maybe you don't want to trade GameStop, right? So as long as you don't break any of your rules, then you give yourself A or B based on the outcome, right? If you broke any of your rules, right? If you kind of prospect theory, right, is probably the biggest, from my perspective, is one of the hardest thing to deal with, right? So if you were faced with $500 gain and $500 loss, and you took $500 gain, but at some point when the market pulled back, you were down $1,000, right? Then I would grade myself C or D, because it means that even if you're 70% correct, but you have one loss of $1,000, it takes two $500 gain just to break even. And with 70% or 75% probability or success rate, you're just kind of spinning the wheels. So it's very important to kind of zoom out and have a long-term perspective. Any questions on Discord? Good morning, Elmark. Cherry Blossom Rosser, how are you? King Maker is back. Welcome back. All right. On any questions? And candles, sure, it looks like market getting exhausted. Volume is slipping and candles are getting short. It looks like market is exhausted. Have Disney, Starbucks bottom. All right, let's look at the interest rates now that we looked. So first of all, where do we get signals? On Tradespoon, I like to use active trader or weekly trader or monthly trader, depending on your outlook. Shorter term, active trader. Weekly trader is popular. We have ANET. Right, so semiconductors rallied today, Royal Caribbean rallied, broke out, and Synchrony Financial. So I like all of these picks. It doesn't mean I need to do all of them, but we traded Synchrony Financial, right? It kind of pulled back. We traded RCL, these signals kind of repeating from week to week. They're also pulling back from, the question is that the false breakout or is going to reverse, and ANET. Right, so we can write them down here. Usually I wait 15 minutes, right? 3 candles. Synchrony Financial, ANET. All right, so we can watch these positions. On yellow tunnel, there are more. Sometimes it's the same number of signals, sometimes there's more. So on yellow tunnel, you can see the signal. Amgen and LRCS are also in a strong uptrend. So if you're looking for biotech stocks, then maybe Amgen is one of the, after the earnings, it's kind of trading in the channel and going into the next earnings, which is 27 days, it's trying to break up. But again, volume is low, right, during summer, and there is overhead resistance at 325. But these are some of the stocks that you can either trade stock or options, right? You can look at the weekly options, if they have weekly options, or monthly options, if they don't have weekly options, and buying calls. But still, the buy and sell signal is, whether you trade stock or option, the idea is to use the same signals, right? Because options are just derivative of stocks. Those are the positions, some of the trade ideas that we could trade today. In terms of interest rates, 4.3 is very important support. We talked about this. This spans over multiple years. You have to go to 2022, right, to see some of these levels. Yeah, so all the way to 2022, October of 2022, and we're kind of trading at this level. So it's stable. You do have this descending triangle where we have lower interest rates, and then we have the support. If CPI tomorrow comes in, cooler than expected, and we break through this 420 level, I think that would be bullish for the market. If it comes in hotter than expected, and we break through this downtrend, and we start posting higher highs and higher lows, that would be, fear of inflation, and that would not be good for the market. But for now, it's trending in the right direction. That's bullish for the market. Dollar also pulled back from its highs, right? It was fighting for this uptrend. It broke below that level, and now it's fighting for the 50-day moving average and 200-day moving average, which is also kind of good for the market, right? After the elections in France, after elections in Britain, the uncertainty decreases. Looks like it's not as bad as everybody anticipated, right? Especially in France, the right, more conservative party coming in, and the market, is stable. So dollar is down, 10-year yield is down. Junk bonds continue to trade above 50-day moving average, stable. That's good. That you don't have widening of the gap between, treasuries and junk bonds, which is also positive, right? So high yield is up. QQQ is up 40 basis points. Semiconductors continue to lead, retesting all-time highs, right? So we have going into the earnings, semiconductors are facing overhead resistance, double top, and then spiders continue to make new highs. It's at 557. Still narrow leadership. You have small caps, mid caps are below 50-day moving average, and just in general, number of stocks above 50-day moving average are still below this downtrend. So we're still posting lower highs and lower lows, and participation is narrow going into the next earnings season. So earnings season is important. CPI data is very important. So Paul is going to speak today's second day, and then tomorrow CPI data, right? So those are the main events to keep an eye on, and then PPI on Friday. In terms of positions, let's look at the positions. Now that we're 15 minutes into the market, I had merit put July. At this point, you want to close all your July positions. If you're still bearish, if you're concerned about 26 level, you can roll this put into August, September. You're doing merit puts, buying stock, buying put, right? Hedging you want to close the July position because most likely, so you had a strong momentum to the upside. So medium term, long term, China's one of the outperformers this year. It's consolidated, then most likely China is going to resume its upward momentum. But for now, it's kind of consolidating. So I'm still long FXI, keeping the stock. I did trim HPQ position. Right, I trimmed HPQ position yesterday. I've been trading around this position. So at the closing bell, I trimmed HPQ. Same thing. It's a strong momentum to the upside of the earnings, kind of a classical setup. And I've been trading around this position. So I just closed the half of the last 30 days. 36.76, took 1% profit, then the stock dropped. So I bought the shares that I sold again at 35 and was able to capture 1.5% gain, close to 1.5% gain. So still have the original half of the original shares as we approach in earnings. We talked about this yesterday with Keith. Earnings, if Taiwan Semiconductors and LRCX have strong earnings, then most likely HPQ is going to rally. If semiconductors are weak, then HPQ is also open print on after the earnings. If we drop below 34 level, then more likely than not, there's a chance that we can close the gap, 32 or even below. So you want to kind of before the earnings season start looking and maybe adjusting some of your positions or hedging, right? I can buy HPQ put, and if you have 100 shares, or maybe even 75 shares, maybe buy a put to hedge. So that was HPQ trade. What else did I do yesterday? I was trying to get out of General Electric, close half of the position. It pulled back. So I'm still in that position. And I did exit Synchrony Financial, right? So I exited Synchrony Financial yesterday because, it kind of, I re-enter it. Any questions? Let's look at Synchrony Financial. So KLAC is up 0.5%. AMET is up 15 basis points. RCL pulled back. Looks like day one, day two, it's above the breakout level. I think the first semiconductor is usually Taiwan Semiconductor announcing earnings in 8 days. So I think I do have 8 days for TSM, or even NVIDIA semiconductors exposure. So again, if you want to, you can buy AMAT. Right, let me just add this. AMAT to the list. Give me 1 second. 1 second. Or Keith, while I'm, entering this data, can do you have an opinion about semiconductors? Or if you, let's say, you want to be long AMAT and you're concerned about earnings of Taiwan Semiconductor, what would be the structure, of an option trade?
Yeah, absolutely. So the way that I look at that for like AMAT, specifically, like you said, is, just right now the implied volatility, the options there are not particularly expensive because their earnings are not till August 15th. So even though Taiwan Semiconductor earnings could move AMAT, they're not really pricing in a big move off of sort of the correlated semiconductors. So it's a safer spot to be buying option premium that I would probably still try to get into some either August 16th or August 23rd options that would price in earnings, because that implied volatility is less likely to just get absolutely pummeled. But you could look at right now in terms of the market, if you're thinking about on the long side with this breakout, kind of going into something like the August 23rd to, I tend to like to go a little bit out of the money when I'm dealing with a breakout, but maybe not too far here. So like a 255 or 260 call in the August 23rd options, that'd be about a month and a half of exposure, gets me through the TSM earnings, and then see how things go. And if TSM comes out bearish, it's more likely to just be an exit for me. The implied volatility will stay elevated in AMAT, so it shouldn't completely destroy the options trade. But yeah, I think that's kind of the way I look at opportunity to capitalize on lower implied volatility, because it's not directly an AMAT earnings event. And I do kind of like semiconductors here, honestly, because looking at SMH as looking for a breakout here, and seems like we could just get a technical basis move here. And semiconductors really have been kind of the leading element of tech for years. Not exactly 100% yet in SMH, but I think that if you're going to continue to have any sort of bullish thesis on the tech market, you've got to have a bullish thesis in semiconductors. Otherwise, it's more of likely to be a red flag for tech on the whole if it doesn't continue. It does not continue higher here. With correlated earnings, I don't like to play individual stocks for their earnings unless I see a real edge in terms of the magnitude of the move. But usually on earnings, I don't have a directional edge. So it's more that I have to be trading purely the implied volatility to get a good earnings trade. So that means maybe I'm trading a calendar spread or like something delta neutral, like a straddle or a strangle. So I was looking at either August 16th or August 23rd for AMAT. I think that would be where I'd be looking. So you've got August 16th pulled up. So the 16th just barely captures that. And it's not necessarily to hold through that earnings date, like I said, but it's more just to make sure that the implied volatility doesn't get hit too hard if it just... And
then you would do a vertical or do a calendar?
For the 23rd, I was just looking at an outright. If you're bullish, like 250, 255. If you're looking for a spread trade to reduce the delta impact, then I might go into something like a diagonal selling a shorter term out of the money call, like an end of July 265 call. Collect $3 there to reduce the total capital expenditure here.
Okay. So I'm bullish, and and this is just another way to express your bullishness, right? You can do a vertical. Depends on, how much momentum do you anticipate in the stock.
Exactly. One of the things that I like to do is, the 30 delta option is usually a big trading tool for me. So if I think that something's going to have a really big potential explosive move, I want to be long a 30 delta option. If I think it's more of a grinding kind of move, then short a 30 delta option. So the 30 delta is actually really kind of a pivot point to me, partially because of the standard deviations and some of the theory behind them. But like when you're bullish and you're not sure about explosive versus grind higher, 50 or 60 delta option can really work. But if you've got some conviction on a potential big leverage type move, your Tesla move that you just had or something like that, then getting a little bit out of the money can really pay off. But that's got that risk where you could go higher and still lose money even though you're long calls. So you got to be a lot more precise on your entry when you're dealing with out of the money calls, I feel like.
Thank you.
So, yeah.
All right. So I decided to buy a stock, right? Because I don't want to be right on the direction, but just like he said, I think you need to have exposure to semiconductors, right? Especially if you're bullish in this market, because semiconductors led the rally. They have been consolidating, but I decided to buy stock. One, and the other is concerned again the seasonality. Usually, like last year, semiconductors actually led the market to the downside. So for that reason, maybe instead of diagonal, you do a calendar spread, right? You buy 260 and you sell 260, just different months, right? If you're concerned about pullback, so get a little bit more conservative approach, or you just buy stock with the idea that even if we do have a pullback in August, September, it's going to be shallow, maybe 5%, maybe 10%. Last year I think it was 10%. Maybe this year it's 5%. But then on the pullback you're going to accumulate, right? And that's why buying stock, you can buy a put to hedge it, or you can sell a call against it. To me makes sense. So usually on half of the shares, I would look for 1% gain. So that would be close to 255, right? So let's see, what's the half? All right, so there's no kind of overhead resistance. So 1% gain. So 250. Let's do 254.90 on half of the shares. And so I split them into two. And also my stop loss is, this could be a false breakout, right? Usually I wait 2 to 3 days, day 1, day 2, but tomorrow after the CPI data, it's probably either going to continue its rally or it's going to reverse down, right? It will reverse down. So if you're doing shorter term trading, I would look at 247, maybe 1% stop loss. 1% or 2% stop loss, 247. Let's look at positioning actually. So let's look at AMAT. So the model actually sees 237, right? Short-term 237 support. That's 10 points. So 4 or 5%. I mean, semiconductors, they lead you on the upside, on the downside, high beta. So it could potentially drop, 10 points, right? That would be 4%. So if you play if it's a longer term position, yeah, you can use 240, kind of 5. Would probably be this gap, right? 246, which would be implied 2% stop loss. So I'm going to be more conservative. So my goal is, if the AMAT reverses and down 2 to 3%, I want to be down no more than $100 on the $10,000 account, right? So 1%, and then I have a choice to make, right? Do I want to add to these shares if I see still a pattern of higher highs, higher lows, right? Let's see where the trend line is. And we have this long-term trend. I mean, as long as we are above 50-day moving average and above this trend line, the idea is to accumulate, right? So even if we pull to 240 or to 230, you do not want to be down more than 2.5%. So you structure your trade where if you're at 230, you're down less than $250 on $10,000 portfolio, right? Less than 2.5%. So for now, if it closes the gap, I want to be down only $100 and then kind of see what the market looks like in terms of earnings and in terms of interest rates. So I bought at, yeah, Keith.
So I was going to say, I'll let you finish on the AMAT. I had a question about another stock there that's related, but I realized you weren't quite done there. So sorry for that.
Oh, it's okay. So I'm going to split it into two. One is at 255, and the other one is 257. 2% gain, 257.5. Yeah, go ahead. Sorry, Keith.
I was curious. I'm looking at some of the other semiconductors here. AMD and Intel just kind of skyrocketing here over the last week. But one that I noticed seems like it's a little closer to a good defined risk level might be Micron, MU. Curious what you think on MU as you look at it. Kind of have my own opinion here of support levels and the trend level. But yeah, I'm curious.
Obviously, it had a strong earnings and then reversed kind of together with NVIDIA. Especially after the earnings, it hit the 50-day moving average. You do have these long-term support. So I like these setups in terms of risk versus reward. If I'm right, then it could revisit 155. And if I'm wrong, if it drops below 50-day moving average and this uptrend is broken, then I'm going to be out, right?
Yeah.
Because no matter what I think, you trade what you see, not what you think, right? That's kind of
exactly
what we're learning in the past few years. So it doesn't matter what I think, but what matters is what I see. And that family of AI stocks, I think there's limited risk to the upside. And then I would look at the positioning, right? How the dealers are positioned and see if there is a high demand for Micron options. So let's see, August. So we have this week's aspiration and August 16. So you still have this kind of asymmetrical, not asymmetrical, but people long vol, right? People long vol, they're net buyers of 150 calls, right? Or they're selling short 150 put. And same thing on the call side. They're either buying deep in the money call, like 115 strike, or they're selling 115 put. But people are bullish. There's some counter spread. July 19th, people are selling. 150. So nobody thinks we're going to get to 150 level by next Friday, but somebody's buying a lot of 150 calls that expire in August, and because of the premium, they're trying to reduce the price of that August call by selling July 19th 150 call. So it looks like a very bullish setup. Usually these setups could be vulnerable for any negative news. So if there's any negative news, if Taiwan Semiconductor delivers horrible earnings, like last time the reaction to all the semiconductor earnings were negative in the beginning, right? So if you look at Taiwan Semiconductor lost to the earnings, and then it did pull back significantly. But Taiwan Semiconductor, I think superconductor, micro, I forgot the other one, micros. What's the other one? I know there's
MicroStrategy, MSTR, is that what you're talking about, or?
No, I'm talking about like super micro, the one that does the chip, that kind of vertical move to the upside. Super.
I know MSTR had that vertical thing that was correlated to NVIDIA. I'm trying to think of what else you had here.
Micro, super micro. Super micro. Super. SMCI. SMCI. SMCI.
Gotcha. SMCI. Yeah, it went from 350 to 1,000.
Yeah. Sorry, I'm just drawing blank. But into the earnings, it also had significant pullback, and that's actually still underperforming. Right? And that's one of the most favorable, favorite stock of 2024. Right? You got this vertical move to the upside, and now it's been consolidated and gave up maybe half of its gains. So we just don't know what the reaction is going to be to some of these earnings plays. So that's my take on Micron. Sorry, I'm a little bit behind the questions. So let me see. So have Disney and Starbucks bottom? Thank you, Jeff, for this question. I'll let Keith answer that.
You said,
is it bottom, and is it time to start thinking about buying Disney?
So I could put Disney on a watch list here, but for me, it's not clear that it's got a bottom yet. Today could be. It's usually a pretty good bottom is in place. It might just mean consolidation. One of the things I look for a bottom is to stop making lower lows. And you can see yesterday we were making a lower low than we had in this move. You had a little bounce back there on, what was that, July 3rd? Basically just a bear flag, quick break back down. So to me, I don't see a bottom yet in Disney. I'd like to see a higher high and a higher low that probably pushes through the 200-day moving average that it just stalled at completely on July 3rd. So for me, I'll wait for the market to tell me it's over. Same sort of idea with Starbucks. The one thing I like with Starbucks is that we are approaching the previous low. So you have a natural stop from the May 7th low. That's 71.80. So you've got really good defined risk there. Yeah, May 7th, yeah, 71.80. So 71.80 would be my stop point. We're real close to it. If we get below that, it could create some others that are going to stop out. So we'll see on that, but we're still making lower lows. So it's that same problem to me. We're not showing any reason that this selling pressure is over with yet. And it might be wrapping up right now, might be getting to that end point, but there's certainly no strength here. And there's definitely still some like a diving board effect where if everybody stops out at once, you could push down the stock rapidly. And that would be, so you'd have to be really careful when you're getting close to those stop levels to make sure that you're not getting out of the pool at the same time as everybody else. Cause if you're trying to sell and everybody else is too, you could just see rapid liquidation moves. So it's a little bit of a hairy trade here, but if you can be quick with your stop loss, your level here in Starbucks at least.
Thank you.
Yeah.
I agree with that assessment. These are not my patterns where you want the consolidation, right? This idea of bottoming process. Right? So one of my rules is don't call the bottom, right? Where's this long short the market? Look for signs of bottoming process, right? Looks for signs of bottoming process. Yeah. And usually this consolidation of bottoming process, it takes time, especially like for Starbucks after really bad earnings, it's going to take maybe a few quarters for them to find that bottom. They need to prove that they have a turnaround story, catch these fallen knives and without some stabilization. If you do, it could be double bottom. So if you do have, if you zoom out into the weeklies, and you have at least a few more weeks where, it start, maybe get above at least this 81, then you have a signs that this is where the bottom is. But other than that, you are taking a risk and you can put a small position just like Keith said, and if it does break down, then you exit. But the stock is extremely weak right now. There are no signs of stabilization yet.
Yeah, I think one of the things that a lot of people look for in the market is these V-shaped bottoms, as you call them, where it's like you're going down and then immediately turn around and go up. And that's just not the normal, most likely process for bottoming. Usually you get that U-shape where there's some consolidation near the lows before we start to show some real support. You need a lot of times an input to create a V-shaped bottom where earnings comes out bullish, even though it's been in a downtrend, something like that. So.
Thank you. All right, Bob. Apparently, Baidu has a robo-taxi service that is faring well in China. So Baidu, I'm long FXI, right? Baidu kind of been underperforming, maybe not the best stock, but it does look like it's same kind of a setup, right? You have this double bottom that spans since 22. If it breaks through the 80 level, you probably want to get out of this trade. So you have, 20% to the downside, right? It could drop from 100 to 80, and then you probably want to exit. But, at some point, it might be a $300 stock, right? Maybe in the next 5 years. So, risk versus reward is there. There are probably better stocks, or you can do FXI, right? FXI, at least I think, looks better. It had this double bottom and it recovered. So that, I would look at that. Alibaba, I think, also pretty weak, right? So if I see stocks weaker than ETF, I think there's less risk in ETF. So I just buy FXI. If you do find stock that's better than ETF, like maybe Tencent, then maybe you buy individual stock, the double bottom. Broadcom split, good discussion today. Keith, ideas and views, very helpful. Appreciate it. Thank you, Fred. Thank you. So Fred's comment, Keith, ideas and views are also very helpful and appreciated. Thank you for kind words. MCHP, hopefully we'll see more, Keith. And micro technology. This is very strong. It hasn't broke out, but it's facing overhead resistance. But it's still a strong stock. I mean, LRCX was today on also to aim at. We talked about LRCX, also vertical move to the upside. I mean, it's $1,100 stock. So, and it's not very liquid. So that's not my, part of my rules, trade liquid names. And, if the options trades, the bid and ask is very wide, it's very hard to trade, especially options. So then maybe LRCX is not something you want to trade options. So then that would be my preference, especially if you're trading options. Keith, what do you think about AMD?
Yeah, I mean, I like AMD on the whole. I got to look back at the chart here. I was just looking over an old stock that always had the liquidity issues, but seems to be getting better now, and that's Vertex Pharmaceuticals. But no, AMD, yeah, so it's getting close to that 70 RSI. I like the RSI as an overbought indicator. So just a short-term potential for slowing of this move that we've just gotten. But I think AMD on the whole, I think it was, it's the end of July, it looks like. So we've got about 3 weeks. I mean, I doubt we'll get to those highs before earnings. So it wouldn't be a trade that I could forecast a move for myself up to the 225 range, only because I don't think we have enough time to get there before I would want to be exiting because of that earnings move. But clearly there's some momentum here. Clearly it's a driving force. I just wouldn't be surprised if we had a day after that breakout that really occurred, at the end of last week with the move above the 100-day moving average on the 5th of July. And then we've just had follow through since. So, I mean, generally speaking, I think it's hard to chase that move since it's already kind of maybe a catch-up stock, like I mentioned in Micron, and say at least I've got the good defined risk of the 50-day moving average there. Yeah.
Thank you, Keith. Fred, thank you. I mean, again, it's losing momentum. It's about 50-day moving average, but there is a lot of this overhead resistance, right? General Electric kind of hasn't gone anywhere since April, since the last earnings season. So it's been trading in this box, right? And it's about 50-day moving average. We do have earnings. General Electric is very volatile around the earnings. So we have 2 weeks. So I think, and that's the positive reaction to the earnings. But expectations are very high, right, for GE, because it went from $100 to almost $200 stock just in 2024. So the expectations are very high, right? Just like for NVIDIA and just like any other stock. So it, last earnings, it was able to continue. This earnings, it could pull back. General Electric usually can move up to, probably, if I have to guess, estimated move is probably 5%, and then two times estimated move would be 10%. So it could drop to 150 level, right? 150 or at least 155 level. So I would definitely, in the next 2 weeks, either try to exit the position, trim it, or hedge it, right? So we're going to keep an eye on General Electric. But here, there's a lot of overhead resistance. So yes, I do want to trim the General Electric position. And that's why I'm trying to get out at half of the position at 165.80.
Yeah. By the way, I was just going to say, pretty good guess on the expected move. I just looked in the average expected move in GE for earnings is 4.8%. So right now it looks like the market's pricing in 6%. So we're expecting even more.
Yeah. So it's kind of, history repeats itself. It's very similar setup, to the usual earnings. And our friend at bar chart, actually, I think they have this estimated move. What is this estimated move? Expected move, yeah. Expected move. Let's type in GE. So they just delivered. So you have, July 12, July 19, you have expected move, right? So when did they announce earnings prior to July 19? 8 days from now.
July 23rd.
July 23rd.
Yeah.
So July 23rd will be July 26th. So 8%, expected move is 8%. Is that what you said?
For the earnings portion of it, the earnings, they just updated on, I used LiveVol from SIBO, but it's 5% now they're expecting for the actual earnings move, 8% for the total move until then. So.
Okay. So
given the implied volatility of the weeklies and then, doing the the normal movement stuff up until the 19th expiration, and then pricing out what's expected for earnings as a result is, they do the full calculation there.
Got it. But I think right now the expected move is 8% between now and July 26th.
Right. Yeah.
Yeah. So you multiply that by 2, it could be 16%, right? So it could be 16% if it's really good or really bad earnings, right? So something you can expect, right? 150 or 176. So kind of what we talked about, right? I said 150 without looking at any moves, and that makes sense because I know General Electric can move up to 10%. So 150 makes a lot of sense to me. Now we have 2 people, so there's a lot more content to cover, which is good. Dow Jones, I'm still hedging, right? I think one of the 4 positions, it makes sense to hedge. You don't want to be all long or all short, especially going into August, September. Dow Jones has been underperforming. You kind of have this triple top. So I still have a bearish call spread, one of the hedging ideas. We talked about China. I'm long China. I'm long GE. Long Google, right? Google continues to try to break out. I think the breakout is confirmed now. Yeah, so we had this strong move to the upside, consolidating. It's probably gonna, earnings is in 2 weeks. So at least for the next 2 weeks, I'm gonna hold the Google spread. It's 180, 185, 180, 185. So same thing. I mean, the expected move for Google, right? So same thing. Google can move 10%, right? It could be a $175 stock, or it could be $205 stock. 175 makes a lot of sense to me, right? That's the breakout. That's the 50-day moving average. In theory, if it drops to 175 and you long the stock and you're still bullish on the market medium term to long term, this is your buy opportunity, right? Just like Meta, right? Meta had delivered not the best earnings everybody expected. Q, NVO, Silver, and UH. NVO was yesterday's news, that Eli Lilly drug is more effective. It did pull back, but still in uptrend. You might want to rotate into Eli Lilly instead of NVO. That is an option. I'm kind of push on these weight loss drugs, and it seems like if you lose weight, it solves all your health issues, different medical conditions. So I think that theme is intact. Silver and UNH. Silver is going to probably move a lot tomorrow after, right? Very sensitive to interest rates. Very high demand at the 30 call strike. UNH is an earnings. Again, if you originally, in 6 days, you either close the position prior to earnings or at least trim it, right? But because UNH also can move, UNH can also move, 5 to 10%, if I have to guess. 6%. So UNH can move, it could be a $460 stock or 524. So it could be a 460, right? It could try to close this earnings gap, right? 470 probably, or it could be 520, right? $520 stock. So something to consider, right? And it's a $494 stock. It's not very liquid. There's a wide bid and ask spread. So position size is extremely important. So you either take it off before the earnings or you trim it. All right, that's all of my positions. It's 9:23. You guys have been great. Keith, thank you very much. We really appreciate your time. We got a lot of positive feedback. People appreciate your opinion and your time. So I'm very thankful you were able to make time today.
Absolutely. Thanks again for having me on.
All right. Thank you. All right, guys. Thank you very much. And we'll see you tomorrow. Tomorrow, same time, we'll have the broadcast. You're always welcome to join us. All right. Thank you, guys. Take care.
Thank you.
Discord, guys. Thank you. Jeff, thank you. What's the Keith last name? Sorry, I'm not sure what you. Pass, thank you. Yes. So his name's Keith Howard with Options Hotline. All right, guys. Thank you very much and have a great day.